Hey traders, this is Ron Haight. Hope you guys had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed to your financial advisor. Clinging to support is the title of the video because that's what's going on here. Here's the S&P today. On the surface, you would say, oh, we were up 0.25%, yay. But this is still tracing out a bear flag pattern. If we lose 280, 250 on a closing basis, this has such a heavy feel to it. This is where the technical target would be. That's 100 S&P points lower once we break 282. Right now, it's 120 S&P points or $12 on the SPY. So set those alerts if you want to be aware of them. This is just not looking good. The up days are weaker volume than the down days. If we take a look at the diamonds, the DIA, it actually probed below the 255 area. We have a new near-term low. It didn't close there. Remember, I'm all about the close. Where do traders want to take their money home? At what price? And we did close higher. We were up 0.5%. But again, down days overall are beating the up days. We lose this. I'm going to go back and say yesterday. That closed at 255.08. We'll call it 255. We get below there on a closing basis. It's about 700-800 points lower on the DIA. We take a look at the Qs, they're holding up a little better. They still haven't taken out 180 on a closing basis. If that happens, then we come back down here. And the reason I say 180 is just because that's about where those intraday lows were. Now, what was interesting as I was looking at this, the spiders and the diamonds, you know, they're probing, they're testing lows. I was really curious to see where the IWM finished the day. It did lose 0.4% despite the markets, the major indexes being higher, the SPY, the diamonds. But we did not close below these lows yet. Had the IWM gotten below there, the tune would be a little different. I'd be even more bearish. But fact of the matter is, if we go back to, let's go back to SPY here. Be very, very wary here. This has such a heavy feel to it that this is the target, and if we break there, there is such a huge gap of support. But there's no way these bullish charts are looking bullish right now. If you're wondering, technically, not a chance. And we also have the red line crossing down through the orange. That is a 20-day EMA crossing through a 50. That is also a technical sell signal. All right, I got some questions on how the international markets are performing. So we're going to go look at Hong Kong, Canada, Australia, Japan, look at some others as well. Here is Hong Kong with the unrest out there. I was reading articles on Zero Hedge. The Chinese army military is amassing troops, I guess, the Shenzhen sports complex or something like that. But they've been in free fall here for a while. Granted, these are only 50-cent increments, but it's still a big haircut. You know, this is the big swing low down here at 20. There is some chop in here, but given there's a potential military confrontation, not military, but not military on military, military on civilian, who knows what could happen with Hong Kong. We take a look at EWC, which is Canada. Watch 27 bucks. It acted as support here. Here again in April. So we have March and April. Actually, it's March and March. Yeah. Early March, late March. And then we have here end of May, right on Memorial Day. Below 27, all the way down here. I'm not saying the Canadian ETF is going to drop 20%. All I'm saying is that's where the next major level of support is. Always keep that in mind. It's huge. And that's what I think could create a vacuum across all the markets. If it's the Hong Kong event, if it's a bank event, if it's whatever event, you know, another, whatever, fill in the blank. We are really close here on support before a breach occurs. If you're looking at Australia, below 2075, your next support level, all the way down there in the 18s. EWJ, Japan, you're sort of testing this area around 52, 52.5 already. You would come back down to just under 49. EWI, which is Italy. 25 bucks is the support level. Below that, the next low is 22.50. All right, and moving on to some other stocks to watch. Here is NVIDIA, ticker symbol NVDA. It was down almost a percent on the day, but watch what happens if I pop this open and we take a look at NVIDIA right now as of around 6:18 p.m. Eastern, up at 156, so $7, $8 higher. If I zoom in here, 156 is only going to put us right there. We're still below the 20 and the 50. Despite this nice pop, it's not doing anything to the technical trend. It remains bearish. So we'll keep an eye on this one on Friday, so I'll cover it in the weekend video, most likely. Here's Walmart, big earnings move. The all-time high stood up there around 115 from the early part of July. So we broke the 50-day, chop, 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 and now we just popped right back above it. This is bullish on the daily chart, massive volume today. There was some distribution when you see that kind of big volume and that kind of huge candle. It's a high wave doji type candle, but we still closed in the upper portion of that candle. That is bullish walking into Friday. Here's Beyond Meat. Remember when I told you guys, watch that 50-day? It was just crawling along it. Well, last night I went to the baseball game, got home really late. We had actually closed below the 50-day. Well, look at today, 11% drop. The market didn't fall apart. The stock just gave it up, and it gave it up on big volume. The gap filled down at 100. 44 bucks lower would be the target right now. And then NTAP, which is Network Appliance, had a question on this one, and it sort of pertains to like trading ranges. Let's do this. If I zoom in here, this was an earnings gap in May. The low went down as low as 61, ended up closing. Low as 57, closed at 61. That candle basically contained most of the price action until the next earnings report. That's really uncanny. So big move on earnings, super tight range the rest of the way. Now look what happened. We had a gap down, and now we're chopping. So now we're waiting for the next big move. If we close up into the gap, a gap fill becomes a target. We close below here, it could open up another round of selling pressure. So there's literally no trade for 3 months, 62.50 down to 57.50, which was literally the range. Now we just wait for the same thing if we wanted to trade Network Appliance bullish or bearish, if that's helpful. All right, guys, wish you guys all the best. I'll be back with you in the weekend video. Happy Friday.